Time now for our weekly market monitor, who has three names in the financial services industry that he likes because they have pricing power. This is his first time on our program. We welcome Dev Kantesaria. He's founder and portfolio manager at Valley Forge Capital Management. Dev, thanks for joining us tonight. Welcome.
Thanks for having me. And
we start with Fair Isaac, the famous ticker symbol, FICO. Of course, they do credit reports and things. I was looking at a 5-year chart of this, $50 5 years ago, $350 today. You think there's still more growth to go, I guess?
We do. The company has a virtual monopoly on consumer credit scores, mortgages, auto loans, credit cards. And, over the last couple of years, they've instituted special price increases. Last year, it was mortgages. This year, it's auto loans, and they'll roll that out to other areas in the future. And they've also instituted general price increases every year above the rate of inflation. They still represent a very small portion of the overall credit decision amount. And so we think there's plenty of room to grow on pricing for this company.
And then the second one is Moody's. A lot of these charts look similar as it happens. It's had a great growth rate over the last several years as well. Why do you like Moody's?
Moody's is in a natural duopoly with S&P Global.
Right.
They rate 90% of all the debt in the world, and you could think of them as toll collectors. When someone needs to issue debt, you have to go through Moody's and S&P. They collect a small piece of that transaction. There's a lot of debt that's going to be issued and refinanced over the next 10 years. And so they have tremendous pricing power. They've increased their prices annually above the rate of inflation for many years, yet still represent a very small portion of the overall debt issuance costs. So we think it's going to have a very bright future. You
like these companies that are in duopolies. So here's another example. Visa you like, but its main competitor would be MasterCard, I guess. Do you like Visa instead of MasterCard, or do you like them both necessarily?
We like them both, and we own them both. They control virtually every payment transaction in the world. They take a small piece of every credit and debit card transaction. And given the trend towards electronic payments, they've had robust growth in the past. We think that can continue into the foreseeable future. Despite disruptive technologies, Visa remains at the top of the food chain. And we think as long as there aren't government controls, pricing controls on debit and credit card transactions, Visa has a very long path of strong organic growth going forward.
Dev Kantesaria with Valley Forge Capital Management. Again, thanks for joining us tonight.
Thank you for having me.